We are here at the Precious Metals Investment Symposium in Melbourne. With me I have the legendary Canadian businessman and gold bull, Mr. Eric Sprott. Eric Sprott, thank you for being here with us.
Luke, happy to be here. I wish my voice was better. I love the publications you guys have.
Thank you.
So say hello to Koos and Mr. Manley for me.
I will.
They do a good job.
What would you say are your personal convictions for owning gold?
Well, I've been personally convicted since 2000, and I've never sold an ounce of gold or silver. We had a great run for 11 years, and then all of a sudden things came under pressure, which I think was orchestrated, because the powers that be didn't want gold to show the world that the currencies were going to become valueless. So they knocked gold down. But it hasn't changed my conviction. I'm a long run holder. We've had a good bounce beginning in early 16, and it's continued on here. So I'm pretty upbeat on how things should play out.
Okay. Now, as the both of us know, currently, it's the paper market that drives the price of gold. And being the case, who benefits from the current system?
Well, the commercial banks benefit because they always, as the public comes in to buy it, commercial banks sell it to them, so they go short. Then they drive it down, and not only do they cover the short on the COMEX, but they're undoubtedly making a pile of dough on options on the share values. So it's a game that you can play every 3 months and just clear the table off. So, and it's had a bit of a repetitiveness, a lot of repetitiveness. And the thing we all hope for is that someday it ends. Yeah. Someday there's a situation where there's a shortage of a metal and everyone starts to realize it. And that the demand for the metals, because everyone knows there's a shortage, overwhelms the commercials.
Do you have an insight into what might trigger this sort of event?
Well, I'm looking at Palladium these days.
Okay.
It's through $1,000 an ounce. It was up 20 bucks, I think, today. That's a sort of smaller metal, smaller market, where really the shorts shouldn't be running the show. Like if people really need palladium, and I'd love nothing better than to see palladium break out, and everyone realize there's a shortage, and then that'll probably spill into platinum. And then maybe platinum goes into silver and silver goes into gold. So that's kind of what I would hope for, something like that evolving.
Okay. Now, I know you look at the COT report quite a bit and you pay attention to the speculative positioning on COMEX. Now, over the past 3 years, I know we touched on this a little bit over dinner last night, but over the past 3 years, the swap dealers and the producers and merchants have kind of been net short together. They move in tandem. But late last year, early this year, we've seen a bit of a divergence where it's the producers and merchants holding on to the short 200,000 contracts, but the swap dealers, they're hovering between 50,000 contracts to negative 50,000 contracts short. What do you think is causing this divergence?
I really don't know. I don't know what is causing that. Even within the commercials, there's different action amongst the top four and the other commercials. There's some chatter that the commercials, there might have some people breaking ranks here and going long. I was surprised when it corrected this last time that the commercials were not able to cover many shorts. They weren't. And it would be nothing greater than they really accomplished nothing. And all of a sudden the buying kind of overwhelmed them. And we're in a whole new paradigm. That's what I'm hoping. So.
Okay. Now the U.S. has arguably recovered the best since the financial crisis, with the S&P hitting all-time highs, reported employment getting better.
Yeah.
Now, do you foresee a soft landing for all this helicopter ZERP money?
No. Do I see a soft landing? No.
Yeah.
Why would you see a soft landing? We saw the great financial crisis. Everything almost went broke.
Yeah.
Then the central bank came in and bailed it out. So we solved the debt problem with more debt. No, I don't see a soft landing, and I don't believe in the recovery. I mean, I know there was a recovery, but it's because you took interest rates to zero, which they never should have been there.
Right.
You bought the financial instruments yourself to make the market work. Well, what happens when you have to reverse that? You know, they're talking about selling bonds. Well, they'll never be able to sell them without rates going up. And, you know, we can't handle much of an increase in rates here. They're so low that I don't know how they're going to get their way through it. It's going to be it's not going to be a soft landing.
Okay. Now, a lot of attention is focused on the US dollar price of gold. Do you think there are other factors to pay attention to aside from the US dollar value of gold?
Well, there's some commentary about looking at what the Japanese yen does, that there's some trade, yen versus gold. I guess the dollar is the overwhelming factor when it comes to reporting why things are happening. I think the more important thing is, well, what's the physical demand like, right? Why is it just dollar related? A dollar, which in my mind, I mean, the one thing I say with a lot of confidence is that the United States is broke for all intents and purposes. So why would anybody believe in the dollar? I mean, they have so many unfunded obligations. It's going to be impossible for them to work their way out of this permanently.
Yeah.
And those chickens are all going to come home to roost here because a lot of it's pension funds and healthcare as people get older. So it's just, you know, just let the retirement tsunami go forward, and the U.S. government's fiscal problems are going to become more and more aware.
But in the meantime, the debt ceiling just keeps getting higher and higher.
And the central banks keep buying the bonds. Yeah. And some central banks buy stocks.
Yeah.
The Swiss central bank. I wouldn't be surprised.
The Japanese central bank.
The Japanese central bank. I wouldn't be surprised that somehow maybe the U.S. government's involved in the stock market. It's been pretty steady, unusually steady.
Yeah, absolutely. Now, about 6,000 tons of gold is traded each day on the London bullion market. Yeah, and as you know, that's almost twice the amount of gold mined annually. Now, is the role of the London bullion market understood in the gold community, you think? And is there a risk that the LBMA collapses, as you know, there's only very little physical gold underpinning this massive unallocated gold structure?
Well, I just find that the amount of gold that that is said to be traded on the LBMA is a total farce.
Okay.
There's just no way. I mean, it's like when they talk about the amount of silver that's traded, it's impossible. Yeah. You can't move that volume of material.
It's at 4 billion ounces this morning.
I have no idea where this data comes from. Okay. So I don't believe the LBMA data. I hardly believe the COMEX data on inventories and things like that. It's just impossible. I don't know who could possibly do all that trading. I don't know what the purpose is served by all that trading. Who needs to trade twice the world's mining production every day? I don't know. It's crazy.
Well, the Shanghai Gold Exchange is here at the Symposium, and as you know, our analyst, Mr. Koos Jansen, he tracks the Shanghai demand for gold, and a good proxy for that would be the SGE withdrawals. Now, we've seen 214 tons of gold withdrawn from the SGE just last month, and similarly in India, and back in August, it was about 46 tons of gold. Now, there's this trend from gold flowing from the west to the east. What sort of geopolitical implications do you foresee happening in this space?
Of course, we all know the answer, right? And I think the more interesting thing is, I think we saw a data point today where, 10 years ago, the Shanghai exchange might have traded 200 tons, and today it trades 2,000 tons. Yes. Okay, so, and the market's only 4,000 tons. So how's one guy get to buy 2,000? Who's not buying anymore? Who did he push out? Or did everyone else just buy paper gold? Right. Which is probably the more likely answer, right? Yep. That the people who think they're buying gold are buying paper gold. Yep. So it's instructive what Shanghai's done. You guys monitor it very well, particularly Koos. Koos does a great job. And I love reading his articles. Thank you. It's a battle for him and you. Yeah. I've been there before, okay? I don't do it anymore. But I love reading his stuff.
Thank you. Now, at this year's symposium, cryptocurrencies are covered in a session called Gold and Cryptocurrencies Collide. Do you think that gold and cryptocurrencies are on a collision course?
Well, I don't know about the collision course part. They asked me what I think of cryptocurrencies. I have not bought in. I don't think I will buy in. I just find that there's 2,800 coins is almost inexplicable. I know that Bitcoin derivatives are going to start trading on the CME.
That's
like,
worrying.
look out below. Look out below. That means unlimited quantities of Bitcoins can be created when they were supposed to be limited by the formula.
Yeah, absolutely.
Now they can create unlimited amounts of supply.
Yeah.
Like it's
Just tweak the margin
it's
rates here and there.
crazy what's going to happen there.
Okay.
So, I mean, I like the fact that people who own cryptocurrencies don't like fiat currencies, which of course us gold owners, we don't like fiat currency. So we're aligned that way. I think they'd be better off focusing their interest on gold rather than cryptocurrencies. But we've been very wrong. They've made huge amounts of money. And I think some of that gain is actually coming into the gold market. Because when somebody makes, an easy million on Bitcoin, now that let's say they sell some, well, what are they going to do with the money?
Right,
They don't
right.
like currencies.
Absolutely.
So I think it gets into the precious metals market.
And I think that's what we are very much looking forward to in our space as well.
Absolutely.
Now, touching on the Sprott physical bullion trust, what would you say are some of the main differences between the Sprott physical bullion trust compared to some of the other ETFs like the GLD?
The biggest one is that you can take physical delivery. Okay. With the GLD, an individual can't take physical unless it's no, they can't. It's got to go through an agent, right? The other one is a tax advantage that we have because we're not treated like a collectible, which has a very high tax rate, which the GLD does. We're treated more as like an equity proxy, so you get a better capital gains tax rate. The other thing is our custodian is Royal Canadian Mint, as distinct from a commercial bank.
Right.
Commercial banks are always scary, and the Royal Canadian Mint isn't. So I think that's a big part of it. So those are the real highlights.
So, I mean, with the GLD, do you think there's a bit of double counting going on with, HSBC being the custodian and the amount of unallocated metal being traded?
Yeah. It's always been a very serious question, right?
Yeah.
And I noticed that when they raid gold, they end up raiding the GLD and taking the gold. Like in some of these declines, like in 13, they took huge amounts of gold out. And they keep wondering, well, what do they need the gold for? Well, you know what? They needed the gold. They needed the gold for physical gold is what they needed it for. And it's the same time that the Indians changed all the rules and their demand for gold went from 100 tons a month to 7 tons a month. All happened at the same time, miraculously. Because I think
telling.
There was a shortage of gold and silver.
Yeah, spot on. What's your opinion on the mechanics of the GLD trust in terms of, do you foresee that the mechanics of the GLD would change over time when people are perhaps more interested in getting physical gold?
I don't think they'll change, no. I think the structure's there for a reason.
Okay.
And it's to facilitate the commercial banks trading gold.
Yeah.
And the Fed maybe having some hand in it indirectly. So no, I don't think it's going to change. I think our vehicles are way better than that vehicle. And we're sort of getting a size now with the Central Trust acquisition that we're going to get a lot more liquidity. So I think we stand a good chance of maybe winning the long war.
I see. Now, the Sprott Physical Bullion Trust is currently trading at a discount to its net asset value and has done so for the past couple of years. What's the reason for this?
Well, I guess because there's always a seller, and whoever is going to make a market just discounts it a little so that he can, in turn, redeem the shares and make some money. And it's small, but you know what? Even a 0.5% gain over a short time is a lot more than you make in a bank these days. So it's a very modest discount, but I think it's there to facilitate, there's not people in North America, there's not a clamoring to own this sort of stuff these days. So, and it's gone to premiums lots of times, and I expect it will again, but there's no huge interest in gold these days. I mean, it can change overnight. I mean, something could happen and everyone's going to love gold. But we're not there yet.
Yeah, I mean, over the past 3 years, with the relative price decline, it's kind of holding its level. A lot of the seasoned investors are looking to jump ship. Now, what advice would you give these investors? And secondly, what advice would you give new investors looking to enter the precious metal space?
Well, I've always been a bear on currencies, okay? I mean, I can't believe that people really believe that the Japanese yen and the euro and the dollar are going to hold their value. I mean, we've had 100 years of them losing value. Who's kidding who, right? Okay. Every year they go down. Whereas we've had 100 years of gold, and historically every year, not every year, but collectively over the 100 years it's gone up. Mm-hmm. And I always ask people, well, think about this, okay? When the next time you read about a guy who found a supply of gold underground, and everyone says how much it was worth today, and ask if the currency was buried at the same time, what the hell it would be worth. And there's no comparison. Yeah. First of all, the currency might not even be a valid currency anymore. Yeah. But if you put $10,000 of U.S. currency buried, it's worth $10,000 at the most, except it lost its purchasing power. If you buried $10,000 worth of gold 10, 20, 30, 50 years ago, well, look at the difference. It tells you something about gold versus paper. Yeah. That's the whole story.
Cool. Well, that's a fantastic note to end this interview on. Eric, thank you so much for your time. I really appreciate it.
You guys keep up the good work. I enjoy reading it.
Thank you. Thank you.